This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Price forecasts for crude in the next 2 years are pretty gloomy, as many agencies and investors anticipate a significant oil glut due to increased production from OPEC and non-OPEC nations. The U.S. Energy Information Administration expects Brent prices to fall from an average of $68 per barrel this year to $51 in 2026. On top of that, an expected surge in liquefied natural gas capacity in the coming years, emanating primarily from the U.S. and Qatar, is set to put pressure on another key growth market for the sector. Oil and gas companies have responded to the darkening outlook by slashing jobs, costs and, perhaps most notably, buybacks.
Oil prices fell on Tuesday ahead of another anticipated production increase by OPEC Plus and as the resumption of oil exports from Iraq's Kurdistan region via Turkey reinforced market expectations of a supply surplus. Brent crude futures for November delivery, expiring on Tuesday, fell 84 cents, or 1.2%, to $67.13 a barrel by 0809 GMT. U.S. West Texas Intermediate crude CLC1 was trading at $62.68 a barrel, down 77 cents, or 1.2%. The drops extend Monday's falls when both Brent and WTI settled more than 3% lower after their sharpest daily decline since August 1st.
Moving on to the top news in the energy sector.
Public funding for international fossil fuel deals fell by up to 78% last year across a coalition of 35 countries, though members of the group, including Germany and the United States, approved new projects, research by a group of NGOs showed on Tuesday. Countries agreed at UN climate talks in 2021 to cease the practice by the end of 2022 and prioritize investment in clean energy instead. The agreement, known as the Clean Energy Transition Partnership, covers export finance, development finance and official development assistance. Tuesday's report from think tank the International Institute for Sustainable Development, and NGOs Oil Change International and Friends of the Earth US said trade wars, rising geopolitical tensions and the United States' decision to withdraw from the coalition and prioritize oil, fossil gas and coal production put future efforts at risk.
Crude oil flows from Iraq's Kurdistan region to Turkey's Ceyhan port are running at 150,000 to 160,000 barrels per day after their resumption on September 27, two industry sources told Reuters. Flows resumed on Saturday for the first time in 2.5 years, as 8 oil companies operating in Iraqi Kurdistan reached agreements with Baghdad and the Kurdistan regional government. According to the agreement, the KRG will deliver the crude to SOMO, Iraq's national oil marketing company, and an independent trader will handle sales from Ceyhan using SOMO's official prices. Producers will get $16 per barrel. Next, we have the top news in metal markets. Thailand's gold trade is pushing back against central bank plans for a tax aimed at curbing a currency rally, warning the measure would hammer businesses and undermine the Southeast Asian nation's role as a major trading hub for the metal. Strength in the baht currency, now hovering near a 4-year high, is seen as a threat to exports and tourism, two key drivers of Southeast Asia's second-largest economy, which is struggling with U.S. tariffs and high household debt. If they impose taxes, the industry will collapse, said Kritcharat Hiranyasiri, president of MTS Gold, referring to the central bank, as he warned that taxes on baht-denominated online gold trading would choke the industry.
Shanghai tin rose to a near 6-month high on Tuesday, supported by supply fears following reports of a crackdown on illegal mining in key producer Indonesia. Indonesian President Prabowo Subianto has ordered the closures of about 1,000 illegal tin mines on the island of Sumatra, where mined tin was being smuggled out on small boats and ferries, state media Antara reported on Monday. The crackdown sparked fears of lower supply from the world's second-largest tin-producing country, supporting upward moves in the soldering metal.
We will now look at the top news in the agricultural sector.
The Indian government said on Tuesday that it would extend its flagship export incentive scheme, the remission of duties and taxes on export products, until March 2026, according to a Commerce Ministry notification. The scheme reimburses exporters for taxes, duties, and levies at the central, state, and local levels that are not refunded under any other program but are incurred during the manufacture and distribution of export products. The extension follows calls from exporters for financial support after US President Donald Trump raised tariffs on Indian goods, doubling levies to as much as 50%, hitting shipments of textiles, leather goods and food products.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.